All right, here we go. Episode 2, QCI show. First one, I think there was, last time I checked, it was like 102,000 views. So we're on to something, actually, I think it was around four views. But we thank you all for tuning in to Ep1. We're just getting started here. Today is going to be going. We got a lot to talk about. Super excited again to be back. Chase, how you doing today?
Doing all right, man. A little rainy day here on the South Shore of Mass, but I'm off next week. I get the rain out now.
Yeah, good day for a pod. All right, number one today, anchor story of the week. Let's go. Artificial intelligence. We know it's here to stay. We know it's the hot topic, but let's talk about how data centers are reshaping urban landscapes. They're drastically shifting CRE markets. They're drastically shifting where money's going. There's a massive impact to energy, to really the entire urban and honestly suburban landscapes, as you're seeing data centers not just pop up in tier 1 cities, but you're seeing them pop up in tier 3 cities. What do you think this means for the commercial real estate industry as a whole, and then tie it into where you see the dollars are flowing into, obviously tech with data centers. We know NVIDIA's on fire and so on.
So I think what was interesting was Morgan Stanley just came out saying they think AI-driven innovation can lead to 34 billion in efficiency gains for the real estate industry. And obviously, a lot of this is off the back of data center development. I think we talked last week a little bit about there are like these different tracks of AI impact on commercial real estate. There's like the demand piece of it, where you're seeing in the typical tech cities, the people who are developing AI are coming back to office. San Francisco's booming, which I know we'll talk about later. So you have the occupancy piece of it. Then you have the data center piece of it, where a lot of data center is developing in kind of core hubs, which you mentioned, but it's also pretty quickly moving into other areas because of access to energy. And I think there's probably a lot of secondary city planning impact that is not totally fully comprehended yet. I don't think everybody's figured this out. And then the third piece of it is the impact on commercial real estate operations, which is that Morgan Stanley stat that I just mentioned. So, I think everybody's going to be talking about data center development, which clearly everything the administration's doing, all the trade deals, there's going to be a ton of investment into data center development. And while LLMs and all these things are going to get more efficient and allegedly continue to require less compute, I think it's a pretty safe trend to be backing. I think the interesting angle that no one's talking about quite yet is what's what does data center, when you think about executing on some of the aspects of this, what's it mean outside of kind of the major clusters, right? Like, are we going to see edge computing for people in commercial real estate that are not technologists? Edge computing is where the compute happens closer to where the user is, right? So it's not going all the way into a data center far away. So what's the impact going to be when you think about like the compute at a building and all of the smart building applications that have been talked about and seen in movies, but never
Right.
executed on by prop tech? I think there's some really interesting development on that side that the market hasn't totally.
You're talking about what, a shift back to on-prem versus the cloud? Is that kind of where you're going, where you're bringing effectively local data centers and you're trying to speed up the compute? Is that where you're going with that?
Well, what I'll say is that shift, our friends in commercial real estate missed a lot of that shift. As we know, uh, a lot of access control, a lot of technology in buildings never made the shift to the cloud. So I wouldn't say they necessarily have an advantage because of that. But I do think there's an interesting, just when you think about, say, energy efficiency, or topical this week, obviously, with what happened at the NFL headquarters, enhanced security and privacy in terms of
Terrible story.
how you compute at the building level. AI is maybe a solution to extraordinary events like that with an active shooter. But anything real time from a responsiveness and efficiency perspective, structurally, if you can be closer to the place, that the compute needs to yield the result, that's going to be, you're going to have an advantage. So when we think about digital infrastructure, not just beyond the mega kind of data centers that you're seeing big tech building out, I think there is some interesting features of buildings and cities where some smart people, enterprising people will start to think through like, okay, how do you think compute needs to be designed at the building and city level to start to unlock some of these use cases?
Yeah, but can that, like, here's a contrarian view. Like, can we even do that? Is that even a possibility? Because, like, okay, I get it, the quantum city stuff and everything that we're marching towards, but the reality is our physical infrastructure able to support that? And that's what's terrifying for me, right? And there's an article talking about how, I think was pretty catchy, AI is eating the grid. But the reality is consumers are the ones getting stuck with the bill because our physical infrastructure is not there to support. There was a stat that the projection of energy usage by data centers is expected to double by next year. Like, never mind all the issues that we're seeing of the power grid just simply when it's hot out in Texas. Now you're talking about massive energy needs in these cities. Like, can we support it, or do we got to build from the ground up again?
Certainly can't support it right now. And this was one of the main talking points of what Secretary Burgum was talking about at the AI summit last week, and a couple of the other secretaries, which is from an energy perspective, if we really are going to capture a lot of the hopeful benefits of AI, there are multiple problems that need to be solved. It's not just being the best at AI, but we also have to be the best at supporting the physical platform that's going to power it. So there's going to need to be, and I think there's going to be a lot of competition between state and city governments that are leaning into upgrading kind of the infrastructure on when we think about electricity, right? Like how you do that well and do it in a way that is going to unlock a lot of these use cases. So I think with our friends over at Wired Score and some of the people on that specific part of kind of the prop tech world where they're really looking at like the quality of the infrastructure, internet connectivity was a big piece of it for a long time, and everybody seems to be doing pretty well in that category. Obviously not equally, but the world wrapped their head around that. I think if you can start to bring the free market into some of these things and really start to crack the nut on how do we future-proof a city for 2050, 2060, whatever the timeline is, such that you can anticipate the impacts of what AI could bring to daily life and work.
Or can you not even future proof? And this is an opportunity where Boston and New York and the archaic systems that they're built on are in decline. And there's a new wave of cities coming based on, there's certainly undeveloped land out there, but this is an opportunity for those tier 3 cities to overtake the two monsters on the coast, whatever it is, SF. And again, we'll talk about SF in a bit, but do we just start over? Again, I know you danced around that, but I want to know, like, can you future proof Boston?
Both things can happen. It's just going to come down to political will and skill. I'm not going to pick the specific courses because I would need to. I would bet on Miami for sure. I would bet on some of where there are mayors that kind of get this and believe in it and understand how to work with the private market. I think any city can solve any problem if they have the political will and skill. And so you need the will of the people to be like, hey, here's an outcome that we need.
Yeah.
And then you need the skill of the people who are in charge not to be dummies and focusing on the wrong things.
Yeah.
So they have to also feed the will and make the case for it. But I do think it's going to be pretty interesting to see I know you had some notes about the Stargate project, which these are at the federal level, these public private partnerships where the White House said they were going to partner with SoftBank and OpenAI and a bunch of, I think Oracle was in there
Yeah.
to create the Stargate project and invest in a ton of this infrastructure. Now, I think they grossly overstated the capital that they had committed to the project, but
Funding secured, Elon's favorite treat. And the best thing about Elon is he actually called that early in a rebuttal tweet. He's like, I got it on.
they don't have the money. And
That's
here's what
right.
I say, like, I'm in the middle on this one where he was right. I don't think they
Yeah.
have the money, but what we're starting to see is Altman has a very similar skill to Elon, where it's like he might not have it, but he tends to get it, right? Like
Yeah.
he's clearly got whatever the it factor is for. He's got everybody trying to kill that company, and he just continues to find a way to make it work. So I certainly wouldn't be short at all OpenAI take of the week. Uh, but
Oh, you're
some
long.
people
Yeah.
were over the last year, and now everybody's switching because he just keeps powering through. But I think
Yeah.
at the city level, not everybody's going to make the right decisions. And this is the same thing we talk about, and we'll probably talk about every week, but we talked about last week, which is the big cities, New York, Boston, Chicago, San Francisco, LA, Seattle, whatever. They need to lean into the fact that they have the hard part, which is the people, right? All of this comes down to people. And so if you have talent and you have that network effect and lock in, you've got the most important asset. I've been to China where you see they built these cities and then they're like, cool, now we want people to just like live in them and modernize. And they're these like ghost cities. The most extreme example there, but it's really hard to build up that stain factor. And we're seeing everybody
But
was,
you can lose that. But you can lose that. We saw SF in California to a degree due to the policy and the regulation. They're losing people now. Now maybe they're coming back, and we'll talk about that in one of the other talking points. But you can still lose them.
you can. And I think LA is at greater risk of that than San Francisco right
And
now.
that's because of that's because, which we should talk about that maybe in a couple of weeks. And that's what the shift of AI into the production and studios. Is that where you're going, or just
Well,
because cities
this is
are?
a good example of political will and skill at practice, which was on both sides of public and private, which is you saw Silicon Valley after shooting themselves in the foot. They did more than that. They shot themselves in the foot, the leg. There were probably a couple of abdomen shots in there over a period of time where they were going to nuke their own golden goose. And they seem to have wised up. There were a lot of smart community leaders at Sequoia and Andreessen, all these places that were like, we got to do better from a policy perspective. Otherwise, we're going to drive everybody out. And they've driven
Yeah.
a lot of people out, right? Like there's just a story today where Reid Hoffman, who is the former PayPal, former founder, CEO, LinkedIn, now runs Greylock, very big Kamala supporter, came out and said, like, the Democrats just cannot be anti-tech, which he said we got into the bad habit of being anti-tech. And he cited an autonomous trucking company that
But it was anti-tech, but it was also pro-regulation.
and like regulation that literally strangled their cash cow, right? So he referenced the autonomous trucking company where he's like, it's just a huge miss that these guys are born in San Francisco, and the first place that's going to regulate correctly the autonomous trucks is down in Texas. He's like, we can't keep doing this. So there's enough people in Silicon Valley that are being smart, and we'll talk about the leasing rebound happening there, that I think they're adaptive
Yeah.
by the nature of the business, and they'll solve the problem, and they've gotten politically involved, which is smart. And then in LA, they seem to be just stuck in quicksand. And so the Wall Street Journal a couple months back had that big expose on how it's the below the line people. It's not the talent. It's the studio people. It's all of the people that make the movies go. There's just no business anymore in LA. Like the studios are ghost towns, right? So you shoot in other states, you shoot in other countries where there are just much better business policies. So I think LA needs to do the same kind of like shock therapy that San Francisco did. And each of these groups, and I'm sure a lot of them do, and it's going to come down to efficacy, but they need to be thinking about like the policy piece of it, the talent piece of it. They got to be thinking about what are the impacts of AI. Like there's this, it's an easy scare tactic to be like, oh, AI is going to kill jobs. Like you can go through every technology revolution, it changes them, it doesn't kill them, right? So that's the people piece of it, where you need to think about how do we retrain and provide people resources to modernize their skill sets to the new wave. But if you use it right, it can be a boom, which is what we're seeing in San Francisco.
One of my favorite memes, we're going to jump to the next topic, is the talking about AI replacing people, and it's like a picture of a guy drinking a beer, and he's like, "I'd like to see AI drink 12 beers and have a bunch of ciggies before noon." Maybe that'll happen. I don't know. All right, let's go in.
All the humanoid robot talk, like
exactly.
You've seen Westworld.
All right, let's jump to topic number 2 here. So industrial. So industrial was the hottest girl at the party for a long time, right? I was in meetings with a handful of large folks, I'm not going to mention their names, last year, where they stated that they are solely investing in industrial and they have absolutely no interest in building their portfolio into commercial. We know a number of our customers and friends at LBA have massive industrial portfolios. And now you're starting to see the tide turn a little bit. Let's talk about it. Is industrial cooling, and why? And does it have to do with tariffs?
That's a very complicated question. I think it was PGIM that came out with their kind of investment thesis report they published for the world to see. And we'll give a shout out to my favorite LinkedIn account, which is an oxymoron, but because LinkedIn's not that much fun. But CRE
on LinkedIn, I posted this week and it went fucking viral. Anyway.
CRE analysts, those guys do a phenomenal job. So anybody, look, people in commercial real estate already follow it, but if you're in prop tech, you should be following CRE analyst, because it's one of the best resources out there to actually understand the real dollars and cents of business. But they published, I think, PGIM's report on how they're long industrial. And I think, look, my take on it is you got to zoom out from the quarter to quarter. I do think commercial real estate has the problem of being a little bit too much of a lemming industry. We saw this with lab. I think we talked about the numbers where lab got overbuilt. And particularly for tourists in the lab industry that don't really understand that tenant type and have no sort of competitive differentiation with the demand side, these things tend to get overbuilt in the short and medium term. I think structurally long term, if we are reshoring, which that's still probably the biggest put and call, I wouldn't know which side to take, so maybe I'd play a straddle on that one. But if we're going to reshore, there's going to be more industrial use case. There's going to be more production here. Industrial, saying that we have a lack of industrial because we're going to see imports hit. I can make the math work on that short and long term, or short and medium term. But if we're actually going to be making things here again, some of that demand would shift to domestic producers, right? So
yeah, but also yes on onshoring and offshoring. But what about the market that we're in? The age of austerity, interest rates are still high, consumer credit card debt is still up. People just buying less too. I mean, that, like, if I'm buying less, if there's less Amazon boxes outside my front door, then there's less needs for the Amazon trucks to be buzzing up and down all those industrial, and they can scale back, right?
Could happen, but I think the consumer spend just came out for Q2 and it was up again. Now everybody keeps saying like it was Q1, the consumer spend was resilient, and it was because everybody was buying before tariffs set in.
Right.
Q2, consumer spend was up because they wanted to buy before tariffs got in. So now I'm starting to think that this was all just what, like this. If this is the bag that they're running, the play they're running, just keep saying they're going to do tariffs to get consumer spending going. How long can that music play? I don't know. But if the if the economy continues to ram, because the economy print was incredibly high, the GDP print, I don't know. So it's a hard one to say on industrial. I don't think industrial is going to go anywhere, but I can't imagine that it could completely sustain the run that it's had, where there's always been uh, one of the best ways you see this in tech. Everybody started drafting off of Y Combinator because they found alpha, right? So there were funds that started that were just like, look, all we do is just we have pipeline access to Y Combi companies,
Right.
which for our commercial real estate friends, Y Combinator is the most successful startup program and incubator out in Silicon Valley.
Started here in
Started
Boston.
in Boston. We blew that one. But just drafting off of Blackstone in commercial real estate, those guys were early industrial, right? So
Right.
I think there's like it'll be interesting to see what kind of exposure some of the smart money has to it as they continue to move forward. So where we are in the bell curve of the hotness of a category. I do think, though, reading some of the reports, there's a little bit of my biggest concern is less around like the noise of tariffs, and I'm certainly not qualified to figure out what's needed to happen to bring certain manufacturing, because I think you got to go category by category back. But I do start to worry a little bit when every single report that you read from fund managers, different developers, etc., everybody's saying the same thing about industrial, and you're like, uh-oh.
Yeah. I also, it's catchy because again, everybody went and leaned so into industrial, but like at the same token, we also just kicked off the show with the anchor story about AI reshaping. Is a data center and what goes into powering new, is that just that's industrial? No, is it not? Is it not? All these data warehouses, are they not?
Well, there's
As
some of our, we won't mention names, but
reclassifying things here?
as we learned from some recent conversations with the heads of some important capital markets people, there's a little fugazi in terms of what gets bucketed as what. We just learned that in some of the infrastructure funds, apparently golf courses count as infrastructure, maybe social infrastructure. And
Fair.
so in terms of what's industrial, what's data center, even
Yeah.
some of our people, when I'm explaining some of the categorization can be used as a little bit of a tool. I guess I'll put it at that, which is a way to use it. So data center to me feels like infrastructure. And I'm very long data center because you just look at, there's no version of the world outside of something calamitous where the world is starting to use less compute over the next
No, totally.
30, 50 years.
But also, like, whatever. If a golf course is infrastructure, so is an Amazon industrial warehouse. Whatever.
Yeah.
Easy for guys. We'll put it in whatever bucket we want to hit the headlines. Let's keep going. All right, let's talk office. So we live in that world. Obviously, a lot of our customers are top 20 or so landlords under office. Is office back? Are we seeing the rebound here? So we had this week alone, we had JBG Smith saying that they are back. They're buying. Again, a lot of our customers we know are going through transactions now. They're back to buying. CBRE had an absolutely massive Q2. Stock is up. And then all major office REITs were trading in the black this week. Optimism in the market is up. Now, by the way, on the office REITs, you talk about spread trades. The combined net asset value of the assets is actually still higher than the majority of the office REITs market cap. So whatever, at some point it'll make sense to just spin them off, but that's I can't get into that. So is office back? Are we here, man? It was a huge week for office. Everybody's coming back. Industrial, so data centers to the moon. Industrial is getting beaten down, and all of a sudden we got some really good data on the office market.
Well, before we move off your NAV play here, shout out if you know that if there's a NAV play, you know that John Gray and Blackstone are already on this, because that's what he did with equity office.
Yeah.
So brilliant back in the day, right? They chopped that thing up right before the global financial crisis and just made a killing. Now, from a pure return perspective, short term or medium term, love that play. In terms of how demand wants to use properties, I think there's some issues. I think the REITs and the way that they're set up to operate and centralize platform across their properties, I think there's something structurally beneficial to that, but that's a separate topic. I think the office comeback is it's going to be the exact same comeback as in retail. This is another recurring topic that we should just basically like cut up and just replay the same segment every week because people are going to get tired of hearing about it. But number one, bosses are bringing people back, as we know. So office isn't going anywhere. The hours that people work, how they work, blah, 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 flexibility,
You
all
got to
that stuff.
reshape the office. You got to rework it, but I agree. Coming
Right.
back.
So that's coming back. I think the talent demographics are still the talent demographics. I think Sunbelt is going to be well positioned, but as you and I know from past business ventures, you can't just immediately develop a new industry cluster overnight. That's not an easy thing to do. So while a bunch of young people may have moved to Tampa and Jacksonville and stuff like that, I still think the economic opportunity in your kind of traditional gateways and strong cities is going to continue to have that kind of power law of cities impact and the gravitational pull for people seeking economic opportunity. And so it should follow that people are going to need spaces to work, even if the structure of leases and all of that is what is forever changed. So uh, I'm not really surprised by this. I think the biggest surprise is back in the day, if you were in a good submarket and you didn't have the best product, you could ride the wave of general demand. And that's just not happening so far from what we're seeing in these numbers, which is it really is a hard line. It's not a very gray line. It's a hard line on if it's good, a good product, and people are want to be there, they're there. But those second tier haven't really started to see the benefits yet. I try not to say Class B because, as you and I know, the CBRE had a report earlier this year that 61% of the building stock in the United States is Class A. That doesn't make sense. So I'm not overly surprised. And particularly from a buying perspective, is there a better time to buy if like the asset is well located and it has what you need to reposition it to be one of the haves versus the have nots? I think people are going to make a killing. I think 2024, 25, 26 are going to look a lot like 2010, 11, and 12, where
Yeah.
winners win big. So
We also saw that we talked about this last week on the show. I forget the stat. It was like I think it was like 100% increase in anchor tenants buying the buildings.
yeah,
So another trend in
why,
the right
why
direction.
would I pay this super expensive lease for people that
Why not buy it? If I'm at the
their
bottom,
landlords don't care about me as the customer?
yeah,
I can go hire people that CBRE. Part of the reason CBRE did so well is because number one, they're well diversified,
yeah,
right? They cater to a lot of different customer types across different asset types. They're also just a machine. But if you're in your own planning sessions, we want people back in the office, and you just do the math on, well, I can own the asset and probably do well on it in 5 years. Like, why wouldn't you do that if you're looking for
yeah.
a
It's free money trade.
place? Yeah, from a treasury perspective, like, I don't know, you can
It's
get
free
people to
money
manage that building. The
on office and sort of general trends of not coming back. Let's talk SF for a bit. So SF got hammered. Understatement. A lot of our customers had a lot of troubled assets. And to be honest, SF is still lagging. We are still seeing a handful of assets go back to the bank. But Figma yesterday blew the top off, 250% increase, absolutely destroyed in their IPO. Anthropic just raised at 170 billion valuation. OpenAI is a $12 billion run rate. What did Jensen say to NVIDIA? What was his flex? I've created more billionaires on my management team or something like that.
any company in history.
The
They should end the conference right there.
he also stated that
I wouldn't want to go after that.
I'm sure he's got a massive retention problem, right? People should just leave. There's many multimillionaires. But anyways,
but the thing I'll say on the retention, I actually don't think he has a retention problem. I'm sure he doesn't retain a bunch of these people, but I think the attraction grossly outsupplies the retention.
But so I agree with that. So SF, office, Resi, poised to surge with all of this. And again, a lot of this is driven off artificial intelligence. We know that, but Silicon Valley's back to having its moment right now. Or it's going to price out Resi, and we're going to have this massive issue where supply can't meet demand because now you got all these millionaires and billionaires working at these companies. But my guess is NVIDIA folks are at the office. Figma folks are at the office. No?
Well, this is part of we talked about politics and private market, but what Silicon Valley, their leaders woke back up to is like now the pendulum is swinging again where it's cool to work a lot. So it's the Jensens and Elons and all the startups that are in that world and of the same ilk that are pushing.
It's cool to work a lot. I'll interrupt you, but then you get the cringeworthy fuckers posting on, what did I see? This asshole on Instagram wrote like, if you're not deadlifting 200 pounds in vibe coding at 11 p.m. on a Friday, you're not going to make it. And like all the comments are like, love the hustle, man, but you can also do one thing at a time. You don't have to do them both.
No, I think that's the cultural structural change that like back in the last hustle culture movement, it was you got to have your morning routine from a wellness perspective, which I'm not going to knock that. I love that. And then you got to work until you can't see and all these things. Now you got to do it all at the same time. So if you're not multitasking all of those things, like, are you a startup? I don't know. I don't think you are, but that's probably worthy of a whole show. But to your point about the pent up demand, because we've had so few IPOs, as we know, like the whole capital stack in tech needs to work together. When IPOs dry up, venture dries up, like everybody's just been hanging on. And so I don't know what the latest dry powder numbers are. We talked about 350 billion of dry powder sitting in the coffers of commercial real estate. And as we all know, that's the way that works with capital calls for people who don't understand fund structure. Like you can't really just take the headline number. There's so much more nuance in terms of institutional investors and LPs, in terms of leaning on GPs on when they actually want to make capital calls and play the whole IRR game.
That was the fun story during COVID too, on the venture and private equity side. At some point, look at all this dry powder sitting on the sideline. It's like, yeah, well, their LPs are telling their GPs, don't fucking pick up the phone.
Yeah, right. Do not call that capital.
Do not.
That was happening in a bunch of commercial real estate, and it was happening in venture and private equity.
By the way, the greatest thing about those fund structures is the more dry powder you have, the more money you make. These guys are 2 and 20. So it's great to have that money just sitting in the capital.
Well,
more money going.
You can make fees for a time.
Right.
This was the thing about the AEW CRE analyst had a great breakdown of AEW's fund performance over the last something like 20, 30 years. And they did throw in the comment at the bottom where like IRR was up and down across different vintages. And they were like, still getting fees though. And they smashed a couple of funds, right? And they still raised despite a tough, I think it was 21 vintage, maybe 23, whatever. So anyway, to Figma, I think Figma and a lot, by the way, Figma saying that design is IPOing, like love that category claiming like design is now IPO'd. And they got all the VCs are tweeting the same shit. So they were pretty well organized on that communication. Love how Adobe, Canva, everybody else is, you guys aren't design, Figma's design. I thought that was a strong move. So design IPO'd. But what's interesting is like now everybody's saying 5.7 million square feet of San Francisco commercial real estate is now AI. Those are the same people who've been working on SaaS and all these other places that just throw a little, you love doing this, right? Just throw a .ai on it and we're good to go. So,
I did buy HQ.
but hey, we're all animals and it feels good, right? Because you're like, yeah, all right, this is so much of this is mental, right?
Well,
This
that's the thing
Warren
about
Buffett, which is
the
just like sentiment, baby. You know what? I
yeah,
will sign that
exactly.
lease.
Well, that's
So,
the thing. Like, what the hell do you think most of these? Oh, sorry, I didn't want to say software yet because that was going to kill my fucking punchline. What do you think all these AI companies are? Are they SaaS? Oh, SaaS is so dead. What is it not software?
well, McCarthy and I had this argument over a year ago, and for everybody listening, Kevin is our CTO who is coming on next week. But he's like, oh, AI is killing software. I kept the text because I was like, dude, AI is software. And I was like, it's just better software. Like, yeah, it's a
Do you
sick.
have that domain? AIsoftware.com. I'm buying
No, it's AI is software, not AI.
that. Oh, fuck.
Yeah, come on, man. So I think there's a lot of people who've just been licking their wounds on both sides of the line, tech and commercial real estate. And now we got a little bit of momentum. We got people, the White House is doing AI summits. So it's like
Yeah,
so much of this is just the
SaaS.
leaders stepping up
Yeah.
and developing some conviction. And nothing does more for developing your conviction than following others' conviction. So we're seeing leasings coming back, money from the public markets is going to cascade down into more venture checks, and venture capital will come back. And so tech leasing will come back as well, because you're also starting to see in some of these VC assessments, like they're asking, they don't want in betweens. They don't want these hybrid companies. You can be an outlier like Atlassian, which is an excellent Australian technology company, and they've been fully distributed their whole life cycle. But I think the most companies are going to cluster where there's talent, and it's going to be an indicator of culture and hard work and all those things. So you're going to see everybody pounding their chest about 7 days a week and all this stuff. So leasing will naturally follow that. Now, what needs to happen, and the whole point of the Quantum City initiative, just to continue to pump our book, is we got to get these benefits into other industries. Like software and technology are really good at dealing with anything that's informational, and it needs to have broader impact on other vertical industries. So we need each of the other cities to be getting that momentum into their core industries, because it's like, look, AI is going to be a complement and a driver, and it's not just going to work, right? Like there's so many of these AI companies that are still in R&D mode, but it's funny, the same movie always just repeats itself. I forget, I think I don't know if it was Deloitte or one of the groups that's now saying that commercial real estate AI spend is going to be upwards of 900 something million over the next 3 years. And this was the same story when prop tech was hot in 2017.
Oh yeah,
Like, prop tech spending going up. Like, it's just a different name.
it's a
Like,
different name.
it's the
Yeah.
same thing, man.
Well, so I stopped listening when you said Deloitte. I'm kidding, but you had a call to Australia, which got me thinking. I've been told that when I wear this sweatshirt, I look like Bluey's dad.
My kids
Which,
never got into Bluey.
oh my god, dude, Bluey's dad is an absolute legend and a role model, and kind of a stud. So one of
Well,
the best
for
compliments I
you,
got.
that's good.
Yeah, so I had to. Speaking of talking books, talk my own book. So one more topic here. So you were just talking about commercial real estate spend into AI. Yeah, okay. Commercial real estate's been the industry as a whole has been a laggard to adopt technology. It's okay to say that. We say that to our customers, yet they're buying technology. Have we started to see gains in AI in commercial real estate, streamlining operations, whatever, using ChatGPT to help them craft leases? Where are we at?
Colliers reports that AI tools like Colliers 360
Ooh,
takes lease processing time.
did you get paid for that? Or did you get paid for that?
I do love the people at Colliers. Lease processing 5 to 7 days down to minutes. So I don't know.
Feel like that's
Well, to me though, I saw that
massive
and I was like, they
exponential
just
gain.
skipped the whole set. Like leases, and the funniest thing, you go talk to
But if
the
you
whole
just copy and paste the whole thing into ChatGPT
yeah,
and you
well,
say summarize it
the
for me,
whole lease industrial complex is a just like one little pull of a card away. Like And you go talk to these people that like their lease, well, our lease is so different. And it's like, well, I can name the 57 clauses that you have in it. So are you doing something like, did you invent new words in the English language that truly creates a different lease construct? And like, yeah, good compliance and being buttoned up so you don't get screwed on the lease, like, sure. But a lot of the same law firms have the templates of these leases. And I think where it was insane when you just think about the teams that do lease abstraction and like how many tools there are for lease abstraction, a little silly. But all that being said, I do think that the industry, because it's so cost oriented because of the capital structure, they are starting to wake up to like, oh, wow, we have a lot of people doing a lot of things that are not value drivers, they're cost centers. And we can start to really actually make productivity gains on the savings piece of this, where the industry continues to need to educate itself is on value creation, not just where we have this gravitational pull to like, we're going to save our way to NOI. And there's going to be a good amount of that, no doubt, particularly on the legal bullshit and all that, lease abstraction for sure, no doubt. But I think we're starting to see some real anecdotes. I wouldn't quite say data. I would say anecdotes on people that are cracking that nut.
The funny thing about it is, like, as you think about, and there was, I'm going to butcher sort of the headline of this, but it was talking about how AI is going to make us more efficient. It's going to save us so much money. And then they were just going through a company's P&L and seeing how much fucking money they were spending on AI. And they're like, well, actually, we're not more efficient now. The P&L has exploded, and we'll start to see a little bit of a call in the future. But listen, we know AI is here to stay. The gains are early. Some folks
think it's going to leave soon.
It could. I don't know what's next. I got to think about domains, right? I like to play in the domain game. What's the next .ai? Good topics. One more thing. My favorite segment of the show each week. Week 2, episode 2, episode 79. One more thing. Okay, so here's my lead into it. One of our products that we offer is a white labeled mobile app solution. Okay. And you'll love where this is going. Hopefully you'll be for. So white label.
He didn't throw this in the show notes for people.
So white label, and I'm going to try not to throw it in the show notes each week to surprise you. So the white labeled, and one more thing last week was Sydney Sweeney and American Eagles market cap. Right. The white labeled mobile app. So what we do is we take a custom piece of technology and we remove sort of the HQO branding. We put the branding of a customer on it. So
God, this is already so boring.
So breaking news this week, and you'll love this because you're a big Celsius fan. The white labeled bottling plant or cannery or canning plant or whatever they called actually made a little bit of a mix up. And the white labeled, and hopefully you've seen this because it's unbelievable. The white label canning was actually putting High Noon's alcoholic seltzers into fucking Celsius cans. So you're talking about what's happening here is there's an FDA recall that some Celsius cans, what you and I were drinking yesterday at the office, instead of containing all the caffeine and whatever nonsense is in Celsius, it's actually just a High Noon.
That would explain some of the meeting size in this week. Hey, I think there is a market. Everybody's so routine now. Like everything's so structured and planned. We got all these tools that plan our lives for us. Like a little bit of a wild card throughout the week. I would be miserable though. Like I have such a headache.
I'm gonna get some energy. I'm gonna have a Celsius.
Massive. Dialed in with the
it's
cells.
Obviously exploded all over the internet. Everybody loves it. Now what they're talking about is
it's a feature, not a bug.
This is the modern day Willy Wonka and the Chocolate Factory. If you happen to crack open a Celsius and get a High Noon, you fucking hit the lottery. So it's absolutely taken the internet by storm. And it really got me thinking about what they should do is combine the two again and bring back the original Four Locos, man. Like, to me, that's the first thing I heard of. You're talking about carbonated caffeine alcohol bombs in a Four Loco.
Yeah, just the heart poppers.
The heart poppers. All right, that's it for episode 2 of the QCI show. Appreciate you guys listening. We got a lot of changes since the first episode. We had a lot less technical difficulties.
A little tighter.
Hopefully it'll be easier, a little bit tighter. Appreciate you guys coming on. Thanks for coming out.
See you next week.